I'm Eric Chemi, and this is Politely Pushy. Really excited for this one. We've got Maryanne Morrow. She's done a lot of stuff, and I can't wait to get into it. She's the CEO, board chair, and founder of Gear Technologies. The company powers foreign exchange trades with intraday lending and same-day settlement. Maryanne's got over 20 years of experience in finance, marketing, and advertising. She's an expert on blockchain, ICOs, and cryptocurrency. Before Gear, she was the CEO and founder of a startup accelerator focusing on faster paths to monetization. So Maryanne, welcome to the show. We're recording right before Christmas. I see that holiday theme in your background. So just tell me, where are you today? Are you at home right now?
Hi, Eric. It's so nice to be with you today on this podcast. Yes, I'm in my house. I live in San Mateo, California, halfway between San Francisco and San Jose, and directly opposite Franklin Templeton.
Oh, there you go. That's pretty good. Very specific. And so, look, the name of this podcast, Politely Pushy. Would you say for yourself, are you more polite or more pushy?
I'm more pushy.
You didn't even hesitate on that.
I've softened over the years. You wouldn't want to really be in the same room with me 30 years ago, but I've softened over the years and working in corporate America, especially on Wall Street. You needed to be really pushy, but I'm more polite because I think that nice goes a long way. And especially in our company, we try to hire happy, smart people that get shit done. And, they have to be nice because if they're not nice and they're not happy, we just have friction that's unnecessary. So I believe that nice goes a long way.
Even though you're pushy.
I am pushy.
But it's funny, you probably don't want to hire more people like you because you don't want them as employees. They'd probably drive you crazy.
I like type A people. I do.
So,
I woke up yesterday and I was told in my household that my energy level was incongruent with theirs. And so, I constantly operate at a very fast pace. And that's what you need to do to start a company. And it's just very frenetic. So you have to keep pushing and seeing, I see the vision so clearly as to where finance is moving. And it's just helpful. I want to get there already. I want to push that fast forward button and already be there. So you have to be on a mission and be pushy in order to make things happen.
So we'll add impatient to pushy as well.
I'm patient to a point, but at some point we just got to get there.
So Ninth Gear, obviously, look, it's powering foreign exchange trades. Settlement risk is the big issue here. You're trying to get rid of settlement risk. Are we still dealing with it? I mean, this is 2022 now. It's surprising to me that this is still a big problem and that in a way that you even had to start a company to fix this problem because you'd think banks would be modernized by now that would go away.
We're still dealing with antiquated systems from the 70s. And I love the 70s. I'm a big fan of music from the 70s. But at the end of the day, I don't use a phone from the 70s. And this device is more powerful than the computers that we used in the 70s. I learned how to code on hard cards, and I'm glad that was only 1 year. But and then we moved into the world of Macs with those little devices that you would put into the machines in order to save your materials. And I remember those days as well. But we're still dealing with mainframes, and people are taking things out of systems, popping it into Excel, and popping things back. So we've moved from pen and paper, and we've done digital incarnations of those ledgers, but it's still manual processes. And I know a lot of folks that just call in trades still to this day, and it just really blows my mind that we're not there yet. But and technology is moving. The pace at which change is happening has accelerated. And COVID has been an accelerant for change, which there's been many bad things that have happened with COVID, but there are many good things as well. When I first started our company, I was told we couldn't operate as a startup with a distributed team. Well, hello world. It's now 4 years later, and everybody is pretty much remote, and we've learned how to figure it out. And our firm was really well positioned because we understood how to use that technology. We're now moving finance into this new world. And when I first started talking about some of the stuff, even before I started this company in 2017, people thought that I was cuckoo for Cocoa Puffs, right? The only person that didn't laugh at me was Fidelity. I called 100 institutions and I asked them two questions. what are you doing with blockchain and what are you doing with crypto? I mean, people were just like, whoa, what's happening? But now, you see articles last week. Jay Clayton, who used to run the SEC, wrote an article in the Wall Street Journal on December the 16th, 2021, about how cryptographic methods or the underlying technology about blockchain is fundamentally going to change finance. And I'm glad that he's doing that because we're starting to see more institutional adoption of some of these methods. And it's going to accelerate and fix some of these problems. So you asked a question about settlement. Settlement risk is a huge problem. The fact that people trade on one date and then they settle on a date in the future, sometimes that span could be a very long time, right? We're right moving up into the holidays. Christmas Eve is coming up, and most things are closed on Christmas Eve. Not all markets are closed on Christmas Eve, but the majority of them are. If you're doing trades today, you're going to have to wait until next week in order to settle, which means your money can't move until it's settled. Settlement is really important, and there's the way that we describe it inside of markets or institutional finance, but I often have to describe this to folks that are not in finance. And when you go buy a house, you don't really get the keys to that house until it's settled. Sometimes I talk with young people and they've never had the opportunity to purchase a house. So I explain it in a different way is that when you go to a bar, you gotta close your bar tab until you get your beer, right? And then it's settled. You can walk around and do whatever you want. You can leave and nobody's gonna come after you. So, settlement is a really fundamental thing and it stops money movement until you've settled, which is a really important thing. So we're collapsing all of this so that it can happen instantaneously. And that means that you have less risk. Not only are you saving time, but you also will have mitigate your credit exposure so that you can decrease your capital requirements. Then you also, by saving the time and doing things in the instant, you drastically decrease your back office costs because you're not going to have the breaks, the reconciliation errors, and corrections.
So who is your biggest challenge in terms of trying to reach? Is it an investor? Is it an end consumer? Because a lot of these banks we know, they don't want to change processes. They don't want to bring in new vendors. They're very hesitant to make changes like this. So is your biggest challenge to get into these banks, get into these trading shops, or is it some other challenge that I'm not aware of?
So I'm going to just knock on wood here on my desk because we really don't have a problem getting into these shops. There is an oligopoly of large banks that control this, and they're making a lot of money on the float. So by doing things in the way that we're doing, it will benefit a lot of folks. It'll benefit the corporations. It'll large and small corporations, mid-sized corporations, and it will also benefit real money asset managers that need to move money around. It'll benefit pension funds. So anybody that is really needing to move money and we're starting with foreign exchange because it's large and liquid. $6.6 trillion per day goes through a system of technology that's from the 70s. It goes on the rails of old technology. So it will benefit many different types of institutions that need to move money, especially large multinationals. You're paying someone in a different country, or you're needing to buy goods and services. I mean, we've seen the supply chains that are just fundamentally messed up these days. And being able to pay somebody so that you can have your goods and be shipped faster, we all want that.
Yeah, the supply chain stuff is like a whole other thing. That would be a whole other podcast, right? So you're bringing blockchain, you're bringing crypto to what's happening in the FX market. And it's funny to see, like 4 years ago, people were like hanging up on you. They were laughing at you, right? And now they all want to do it. So to be
Mhm.
so early, it's hard to be so early, right? Because people just think you're wrong or they think you're crazy. Now, do you find the conversation is shifting and people are coming to you and say, hey, I remember you mentioned this. Now I want to hear more. I
Yeah.
know it's 4 years later. I'm ready to hear more now.
Yeah. Well, first off, we use cryptographic methods, but we're not moving anything in and out of cryptocurrency because moving something in and out of cryptocurrency, there's a whiplash effect because the cryptocurrency moves up and down, and we're trying to eliminate risk. And so we're not doing that. We do it in a very elegant and fundamentally different way. But with regards to the conversations, they're easier now. I've gone to some very large institutions that never did they ever think in the halls of these very established premier boutique type asset managers they would ever be talking about what we were doing. But once they figured out that, and I unpacked it for them, the conversations continued. At this point now in 2021, there is institutional adoption of cryptographic methods. I always use distributed ledger technology versus blockchain just because blockchain always is conflated with Bitcoin. And while Bitcoin
You mean the
uses
word,
cryptographic
like just by
methods,
saying the word blockchain, people freak out. If you say distributed ledger, it's like, oh, that sounds important. That sounds good.
yeah, well, the innovation groups of most large financial institutions are now starting to dip their toe into that pool of information. Not very many companies are actually using distributed ledger technology. So we are not a solution looking for a problem. We're solving this problem, and settlement is really a perfect use case to solve with this technology.
A lot of people listening, like you say blockchain, they're going to think Bitcoin, they're going to think cryptocurrency. You're involved in foreign exchange trading and Bitcoin. A lot of people, they treat it almost like a foreign exchange now. So changing
Mhm.
topics a little bit, changing gears a little bit. How do you look at cryptocurrencies? Do you look at them similar to FX? Are there some that you would invest in? Are there some that you say, you know what, I want to put Maryanne's personal money into some of these, whether it's an ICO coming up? Because you know all about this. You know more about this than I do. Where are you actually putting your money when you see all these new crypto assets show up?
So I like to invest in the infrastructure. So I don't want to say and name any in particular, but their infrastructure is where I would look for it. I do own cryptocurrency, both in a hot wallet and cold storage. I have a Coinbase account, and I also have a Ledger Nano that I store some things on. And I really have asked everybody on my team to buy a not a what is called a crypto kitty, the fun little game. It's almost like Pet Rocks, only virtually. But what it is useful for is that it shows and teaches you some of the underlying mechanics of how it all works, and that really is helpful for building the team because on some of the tokens you can apply attributions to them, which is the reason why some of the crypto kitties in the game, have blue eyes, which are very rare, or they're pink or purple, whatever color they are. But some of the underlying types of technological pieces are important to understand. So, for $5, open up an account and buy some Ethereum, ETH, and then just trade with somebody. It's a very simple and low cost method to learn about it. So then once you've established that, then you can go out and buy. I like to try everything. So opening a Coinbase account was a lot more challenging. I did it several years ago. I'm sure that things have advanced and they made it easier. But and also how to do something and put it into a flash drive and keep store of value on that. It's an interesting perspective to learn the mechanics of how to do that. But for me, to answer your question, I like to invest in the infrastructures.
I was hoping to get some names out of you. I was hoping to say, okay, I like these coins and I don't like those coins.
Well, I'm not going to tell you that today.
Okay, so how should someone judge upcoming ICOs, right? Because that's an area that you've looked at. How does someone know how do they know what's BS, what's not BS? Because you're seeing things on the inside, like you're looking at that infrastructure, you're looking at that nuts and bolts. A lot of people don't know. I think that's what makes it scary for some people. It feels like the wild, wild west out there.
It is the wild, wild west. So 2 weeks ago, I was in New York City with Clayton, Jay Clayton, who was the former SEC chair. Now it's Gensler. Gensler popped into the meeting on video, but Chris Giancarlo was there, who just wrote a book called Crypto Dad, which is a great read. And then also um, he was in charge of the CFTC, and Brian Brooks, who was in charge of the Treasury, was there. So we had these conversations. There were about 100 individuals in a room that we talked about risk, and we talked about compliance and what's happening and some of the networks, and how to look at this whole area, because the the intersection of finance and technology right now is very much heating up. So the way that we do things has to change, and there's so many new pathways that are happening. I think about this time as what happened when the internet first started. We're seeing a lot of some of the same things that happened, um, several years ago, a couple decades ago, and it was very much just do no harm. In this new case, we're seeing a lot of folks that want to regulate everything, and whether that's good or bad remains to be seen. But in the world of ICOs, initial coin offerings, at some point, some of these cryptocurrencies will become securities, and they will. Um, you need what comes into place is the Howey test from 1946, and the SEC. In fact, Jay Clayton said it was the best thing that he did at the SEC was to come up with the DAO report in the summer of 2017. That's also known as 81207 from the SEC, and it says that at some point these cryptocurrencies will be securities, and they will act like that, and we're going to regulate them like that. So ICOs went up very rapidly in the summer of 2017. It's when I started. It was when I had my blockchain awakening, and I went right down the rabbit hole. I wanted to study everything about how all these different technologies worked. And I was one of the few people in the valley that said, I'm not going to ICO. And I don't think anybody else should, because from a regulatory perspective, I've read the securities law and I understand them, and understand that some of these cryptocurrencies will become regulated like securities. And it's no surprise that the SEC went after them, and they're prosecuting them. So, and they're not only prosecuting the people that have put the ICOs out, but also prosecuting some of the attorneys that are representing them and people that have invested in them. So we have different regulations here than some of the other jurisdictions, and I believe that there will become more regulations are coming, and stable coins are the next thing that will be happening, because that's definitely under the microscope. And we now have somebody at SEC that taught a class on blockchain at MIT, Gary Gensler. So I anticipate having more regulations come out, and a lot of these regulatory institutions, they watch behavior and then they say, don't do that again. So what we see now is very Wild West. I anticipate that this will become very regulated soon.
They let you do it once. They don't let you do it a second time. If it gets very regulated here in the United States, does that mean people just start moving their assets to other countries and you just find that lowest common denominator? Or is it just one country like the US is big enough that their regulation can change the entire marketplace, the valuation of these currencies, of these coins? And is it more of a shift to avoid the regulation, or you think it's enough that because you can't regulate the whole world, right? But there's no geography
No,
for a lot of the stuff.
but you have to understand that even, outside of some of the crypto stuff, 88% of all trades involved USD. So, because you have to think about, both sides. The Bank for International Settlement looks at and does a triennial survey, and the US dollar is in 88% of these transactions. And I anticipate that that will continue. We do see a number of different jurisdictions. Switzerland is one. They have this area called Zug, SZUG, which is an area that's very frothy with crypto. And so you see pockets of things. In 2017, we experienced a lot of more cowboy type things out of the Turks and Caicos and some really unusual jurisdictions. Bermuda is also a hotbed, and they have some interesting regulations. Malta is another area that has interesting jurisdictions, and it's part of the
Malta's
EU.
always got something going on over there, right?
Yeah, it's a good place for folks that kind of want to hide sometimes. But what's nice about Malta is it's part of the EU, and they also speak English, so it's an interesting place to set up business.
What about your role as a woman in tech, right? There are not a lot of women who are starting companies in the blockchain space and the foreign exchange space. Like you must be often in meetings the only woman there.
I'm very comfortable with that. I studied engineering undergrad, and then I went and studied finance and law. I'm used to being the only female in the room working on Wall Street. The one thing that is surprising is the way that capital flows to women. We have now raised over 5 million of investment into Ninth Gear, which is awesome. But it's been a hand-to-hand combat to do that. It's all been from individuals, somebody that I know or somebody on the team knows, and
Oh,
our
as
team is
opposed to institutional VC type of backing.
right. So only 1.7%, again, I'm going to say that louder for people in the back row, less than 2% of all investment goes to single female founders. The rest goes to male founders or a mixed team. So that is a statistic that is in my face every single day. And we are moving right now into the market and we're doing some pilots, but we just won a really large contest, and that's helping shift the dynamic because once we finish this next milestone, it won't matter whether I'm purple with green spots because we'll have proven what we do. So we've finished proof of concepts, and now we're moving into more advanced stages, which will make the capital come into ninth gear. But it's been hand to hand combat, and it's the biggest aha moment that I've had starting a company is the inability to have opportunities come to me because I'm female. I mean, here in the Valley, I have sat across from a VC that never looked me in the eye and never asked me a single question during the meeting. He only dialogued with my male colleague. And it was so uncomfortable that I just stopped talking and I didn't want this person's investment anyway. And my male colleague kind of followed my cue and afterwards he's like, that was just so weird. And it just is a strange thing, and I
You forget
also
that that would happen. You forget that that's still behavior that could exist in the 21st century, right? Like
it
sitting
happened
face to face from someone and getting silence.
yeah, it happened in 2019. I also received the prevention questions. Harvard Business School, there's a TED Talk on this subject about promotion versus prevention questions. So when I'm in a room and pitching, oftentimes, I receive "Well, why hasn't anybody else done this?
Right.
What is your competition? What makes you think you're gonna do this?" And I also received the lovely questions, "Do you know how to sell into a bank?" In, a room of 20 guys in a boardroom in Palo Alto. That was one of the questions. If you look at my, CV or LinkedIn profile, you'll see that, yes, I do. And it's it's shocking that I would receive a question like that, but it happens, and, that is the biggest aha moment. I can count on one hand number of times that somebody has asked, "What are your hopes and dreams for this company? Where do you see this company going? Where will you be in 5 years? How will this impact finance?" I never receive those questions.
If you had known all of these ahas in advance, in hindsight, would you have started the company?
I would have put a male in as the CEO. Not that I need a male CEO, but I would have to play the game.
Right, right. Interesting. It's like the opposite, right? A lot of times there's diversity. It's like, oh, we've got the token woman in our board. You're almost saying, I need the token guy to be the CEO so he can at least get all the standard questions instead of you.
Correct. Well, it
It,
just he won't get the question.
right.
He just the questions, right? It's
it-
still very protopia.
right. He'll just get the standard guy questions. He won't get all the questions that you're getting, right? He'll just eliminate all of
Correct.
that. It's not too late. You can still hire a guy, right? You could still have a guy be your CEO.
We're so close. We don't need one. We're ready to go. And we won this great challenge recently. I'm just gonna take a minute
Oh, yeah,
to
actually, yeah, talk about that
highlight.
because actually we were gonna record a few weeks ago, and literally like the night before it was like, oh my gosh, we're up for this award, and we got to reschedule. And so we were recording. I don't think there would be Christmas things in the background if we had done it right at this award. So actually, the award is so relevant to
Right,
this recording. So yeah, please. So what happened with all that? What
right.
did you win? What was that process like? Because it was an emergency. You're like, I can't record tomorrow. I got to deal with this.
Yeah, it's exciting because there's so many times when we have applied for things that are more, I would call it beauty contests. We've won a lot of awards, but this one was different. We applied to a thing called the Global Open Finance Challenge that was sponsored by 4 banks: NatWest, CIBC, Ituao, as well as NAB. So for those of you that don't know, Ituao is a large Brazilian bank, NAB is a large Australian bank, Canadian Imperial Banking Corporation out of Canada, and NatWest, called RBS or Royal Bank of Scotland. They've changed their name to National Westminster Bank, NatWest. So they were the sponsors, and we applied. There were over 200 companies that applied. 91 of them went all the way and played in their sandbox. So it was different than just a pure hackathon where they say, this is the problem, solve it for us. They said, here are our sandboxes. Figure out what you could do. We could only have 6 people on our team participate. So we figured out who was going to be on the team, and they gave us exactly 1 week. At the end of the week, we had to deliver a 6-minute video of a pitch, a 5-minute demonstration of our product and our tech spec. We made it to the semifinals, which we delivered a 5-minute pitch and tech overview, and then we made it to the finals, which I had the opportunity to present to the CEOs of all those banks, the CTO of Amazon, and 2 VCs from Motive Partners and NEA. And we won. We won in the experience category. And it was a fabulous thing because it did a variety of things for us. One, we were 2 to 3 weeks premature from being ready for this. But we sprinted. We put a lot of pressure on our tech partners, and we sprinted and we released 1.0 during this time frame. So that was amazing.
Yeah, that's why you had no time for podcasts that week, right?
And no time for you, Eric. I apologize, but it was great because we won, and we had the ability to present to all of these CEOs, and so we have a great prize packet. We're working through that now with these 4 banks and putting together a more complicated proof of concept for this. So we're thrilled. We know that our product works. We've demonstrated that earlier this year with our first POC. Now we're working with the big boys and we're making this happen. So we'll move right from that into market. So that is just it's been a wonderful opportunity, and it's had a lot of accolades, but the work that we're doing with these institutions is really meaningful.
That's amazing. That's impressive. That's certainly going to kickstart 2022 for you. Should be a much more accelerating year. It'll be interesting to see what happens. I would joke at the end here. I would say, but do you know how to sell into a bank? But I don't know if that joke would.
Yeah, so it's a critical stage for us. We are using our time really wisely, and we're making this happen. So we will beat people to market that have started before us, that have raised over $100 million. I mean, we're doing this on a shoestring, and as I mentioned before, women just don't raise a lot of money. So, but we're really scrappy, and we're making it work.
It's impressive, Marianne. It's impressive what you've done. Scrappy company. It's right on the cutting edge. It's hiding behind the scenes, obviously, because a lot of the end consumers, they don't think about foreign exchange settlement risk, but the way you describe it, hey, it's like settling that bar tab. Like you don't get to walk around with your beer until you're settled up. All these things that we transact on one day, but they're not settled until some other day. As global finance starts to just become more interconnected with the way we live our lives, the way we do all kinds of shopping and commerce and institutional retail. It's just going to take over what you're doing, bringing blockchain to the traditional banking sector. Man, it's impressive. I'm glad we got to connect before the year ended. Congrats on that award. That was certainly a much better use of your time than talking to me a few weeks ago, but I'm glad we got to do it now on a quiet week. So thank you so much for the time, Aaron. This has been really an eye-opening conversation on the way you see the world and the way and how you got to this point.
Eric, it's been a pleasure talking with you. Thank you.
Awesome. Maryanne Morrow, my guest today. Thanks for listening, and we'll see you next time. Thank you to my guest, and thanks for listening. Subscribe to get the latest episodes each week, and we'll see you next time.